Good Friday, everybody. Welcome to today's Daily Recap. I'm Laz. I'm the CEO of T3 Live, and I am filling in for Scott today to wrap up what seems to be a pretty wound-up week. And let me explain what I mean by that. So as we take a look at what happened this week in terms of price action overall with the markets, there's really not much to say other than tight. And what I mean by that, we're going to look at the SPYs here. You can see that we broke out, made new highs back here towards the latter part of August, peaking right around up here around early September. So there was a lot of, buzz or excitement, new highs, and that's all good and well. And this market still continues to act very, very well and still remain, technically very strong. Now, there is some decay happening in here. And like most breakouts, what you want to see is you want to see the market, push higher, break resistance, which it clearly does, make new highs, and then, consolidate and ultimately go higher. So what ultimately you'd like to see out of this, sideways contraction, this back and forth price action, and we're still holding, for the most part, barring today, highs. Now I anticipate this is going to turn down. But that being said, let's go up a time frame. Here you have the weekly chart, and in the weekly chart, let's zoom in just a little bit. You can see what I'm talking about. So you break out about 3 weeks ago, and then you have this 3-week consolidation. Today's close is fairly ominous, and should we get below this breakout, there's some room to trade back down. You still have, like I said, overall bullish trend in place. Here's a weekly chart, and I've highlighted this several times as I've done morning calls and recaps, and even for those that are part of subscribers to Off the Charts that are getting my analysis. There is some deterioration occurring here, but overall we still have to respect the trend. And again, it's all relative to the time frame that you live in. For those that are short term and looking at each day by day, or you're probably focusing more on the daily. You're looking at each particular candlestick. Obviously today, seeing some selling and what could be the impetus for a bit of a turndown. And if the market does clearly break below this support level, there's room to trade lower. There's lots of open gaps in here. Back from this whole move up. I'll get out my nifty little pen tool here. You got some open gaps, meaning these were basically gaps in price overnight that could set us up for some sort of downward move. And it wouldn't surprise me, again, let me kind of zoom out here. It wouldn't surprise me if we saw some sort of, larger drawdown. Obviously, you can do it as you see fit, but to me, there's, overall, this is sort of your intermediate term trend line. So, without being too specific, we could see a trade in the next few weeks, maybe back down into this, area. Let's call that SPY, 195 or what have you. That's kind of what this is telling me, but this market, as we are well aware at this point, several years into this up move, has the capabilities at any time to hold support, which clearly it's done here. And we're still, for all intents and purposes here, we're still hanging on here. Obviously today, a little bit of tick up in volume doesn't support that case. And like most breakouts, you'd like to see this thing. You would have liked to have seen this market continue higher. I know I'm going a little arrow crazy here, but that's kind of what my thought process is, and it's not rocket science. I'm just using a little bit of common sense. As I've seen in the stock land over the last few weeks, I've seen a lot of stocks break out, have the earmarks like they want to go higher ultimately to fail and turn back down. So, the market could be setting up for that kind of situation. So it remains to be seen. Obviously, still holding above the previous breakout, but certainly looking like there could be lower prices in the cards. And as we go around the horn here, a couple of stocks that kind of jump out at me. There's some interesting little scenarios developing in pockets here. The first I'm going to look at is Google, and Google hasn't been a great trade in the last couple of weeks. Really, there hasn't been much, in terms of directional movement. Obviously, a stock like Google, market leader, and clearly, has been a breadwinner for many weeks for many people. But has the earmarks here. Again, this is a sort of an intermediate term where we could, be breaking this intermediate term trend line, in which case, you have this, this sort of the next layer of support could be down around that 540. So we're going to keep an eye on, like I said, there's some interesting scenarios to watch for, some cracks in the armor. A trade that we have out actually up on the off the charts, nightly trade ideas newsletter is Chipotle, and Chipotle obviously real tough to trade. Not the most liquid name, and certainly very expensive. But certainly cracking here. We had the entry. You can see it annotated here. The entry was at 674. But now trading is 664, so starting to break down, and it looks like it has room to trade down to maybe the 650 area, and ultimate target down there at 600. But then there's some other interesting trades. Obviously, everybody's been watching Apple. I know Apple's been a hot topic, and it's been discussed at length by Scott and many others on the virtual trading floor. Some wild gyrations here, especially with the release of the new iPhone. It's more of a day traders type of situation right now than I think anything else. Lots of volatility in here. You can see these big swings where, essentially, I guess this is the release date. Ultimately, what didn't wind up being all that bullish, more of a volatile, intraday type of situation where, you get this. Let me go back to my pen here. You get this, move up. And let me change the color. You get this move up, and we basically test highs. You can see where it peters out, and then trades back down, and even tests lower before kind of basically closing not too far off where it opens. But over the next couple of days, we see a nice bullish reflex. I would seriously watch this level here, that 103. Area in Apple. It's obviously posing some resistance. It's you can see this is where we topped out over here. Again, it was tested on that release date with the news, and we'll see what happens in the days to come. But certainly, an area that you have to respect is that's what price effectively is telling us. A couple other names that I want to touch upon that I thought were interesting. Certainly today, I noticed real estate, the IYR, the real estate index here, just utter thrashing right to the woodshed, breaking support, a few days back, and this is why you have to be, careful about, breakouts that fail, thrashing right through support, really not much of a bounce, and coming right back to, this major, we're going to call this major support, as it's been tested several times. So probably, find some sort of short-term bottom down in the 70 area, but real estate really taking it on the chin today, and you can see that big volume there in the IYR. So a couple of stocks, obviously, to focus on are some real estate names, probably trading down with the IYR. But then you have on the other side, you have Goldman. Goldman, obviously, highs today. Goldman acting very well on a weekday, so Goldman, pushing higher. Not a big fan of the way Goldman trades personally, as it's been a real chop fest for the better part of the last 2 years. And by chop fest, you can just see the ebbs and the flows, and the ebbs and the flows, and the ebbs and the flows. And it's been, what I define as hard money. Starting to change here. Clearly, again, breaking, above, prior levels up here. So definitely a name to watch. In the days and the weeks to come, to see how it sort of consolidates and acts in the shorter term. Could be some more opportunity there. Microsoft, also another one of those names, just continues to act really well. Microsoft, I wouldn't necessarily get super aggressive with it here, but clearly, again, all these annotations that you see here are just from my the off the charts. But Microsoft again consolidates very well. Had a nice week breakout. Really nice breakout on good volume. A couple of days of consolidation. Twitter, Facebook, all these names continue to act really well. So it is, it's a pick and choose your battles wisely in this tape. If the market does, start to, break support, you could see some of these stronger names start to at least, wither away. But like I said, it's right now there's not a lot to do. I don't think that it's a market you want to be overly aggressive with, or even overly directional with. So take a look at what you're doing and how balanced you are. Or in the event that the market starts to crack a little bit, are you prepared? Do you have some ideas? We've looked over the course of the week. I've seen some energy and oil names start to break down. Conoco, Apache, Exxon. Some of these names, obviously not faring well. So it really is about doing your due diligence and having a real good plan here. For those that are not aware, we're going to do our first T3 Live Top Gun Options webinar next week on Wednesday. Wiz is going to saddle up and give you a kind of a glimpse into his world, and I'm really excited about that. I think that this is the time where the true test of a trader is what you do when things get tough. When the markets are breaking out and everything's going up, everybody looks like a genius. The real test of how intelligent you are as a trader really comes in a time where we see hard money and you see, like I said, overlapping candlesticks. This is hard money. Market's not making headway. It's green one day, red the next. What I used to call this, or what I do call this, is, and it's a little bit graphic, but it's frogs in a blender, right? And I'm sure you can all figure out what I mean, but it's red, green, and it's not a directional tape, at least, until it becomes a directional tape. So part of, what we do and what we talk about is understanding risk. And, like I said, the true measure of a trader is not necessarily how much money you make. It's how well you analyze risk and how, what you do with your decision-making process that ultimately defines, what type of longevity you're going to have. And that to me is, if anything, a little food for thought for the weekend, to ask yourself. And again, it's always good to do a little self-analysis. Are you on top of, what you're doing? Do you understand, when you think risks are higher? Are you trading to trade? Are you making good decisions? Are you finding, what I call the low-hanging fruit? Are you going through the motions in the right way? Because a lot of times what I find is that a lot of time, let me start over. What I find is that if you find yourself trading to trade, you're doing something wrong. A lot of time that I used to spend trading was actually not trading. It was finding good situations and getting involved at the right times with appropriate entry and exit techniques, and then letting those those good situations develop and become good situations. And in the event they don't, when to, as Wiz says, eject. And ultimately it's a simple process, and it's wash, rinse, and repeat. I think we as people tend to make it harder than it needs to be. So with that, I hope everybody has a great weekend. Again, I think you're gonna be in store for some good trading action into the fourth quarter of this year. And for those that are looking for some options, color, commentary, content, ideas, we're loading the decks here in the coming weeks, and we're going to kick it off on Wednesday with Wiz's webinar. So have a great weekend, and I will talk to you next week.